All right, let's talk about ETFs. You've probably heard that term floating around, right? And if you've ever thought, man, that sounds complicated, you are definitely not alone. But here's the thing. What if I told you it's actually one of the simplest and honestly most powerful tools you can have in your investing toolkit? Let's dive in and break it down.
Yeah, exchange-traded fund. I mean, just say it out loud. It sounds super formal, doesn't it? Like something you'd find buried in a finance textbook. But trust me on this one, you're going to want to stick around because it's not what you think.
It's actually way simpler than you think. The whole idea behind those three letters, ETF, is surprisingly easy to get your head around. So let's go ahead and unravel it all. We're going to turn this seemingly complex thing into a super simple idea you can actually use.
Okay, first things first. Let's just cut straight to it. What even is an ETF?
So if you look up the official definition, you'll see something like this. An exchange-traded fund is a type of investment that holds a collection of assets like stocks and bonds. And yeah, that's true, but it doesn't really paint a picture, does it? It's kind of abstract. So let's just throw that definition out the window for a second. And instead, let's make this super simple. I want you to think of an ETF as a shopping basket. No, seriously, a simple shopping basket. That's it. That's pretty much the whole idea you need to understand this. So what's inside this basket? Well, it could be a bunch of different things. You might have some Apple stock, a little bit of Tesla, maybe some government bonds. You could even have hundreds or thousands of different investments all bundled together in there. And here's the magic part. When you buy just one share of the ETF, you're actually buying a tiny little piece of everything inside that basket. Okay, so you've got the basket idea, but you might be thinking, why is that so great? Why not just buy Apple stock if I like Apple? Great question. And the answer really comes down to one crucial thing: risk. Think about it. Buying stock in just one company can be pretty risky. Let's say you put all your investment money into one company, and then that company has a bad year. Ouch. Your entire investment takes a hit. It's that old saying, don't put all your eggs in one basket. Let's stick with our basket analogy, but let's make it a fruit basket. If you only own one apple, and that apple goes bad, well, you've lost everything. But if you have a whole basket full of fruit and one apple goes bad, it's no big deal, right? The rest of the basket is still totally fine and valuable. That is exactly how an ETF works to lower your risk. And that's the whole point. ETFs are so powerful because they help you spread your risk out automatically. You don't even have to think about it. There's a fancy word for this. It's called diversification, and it is one of the absolute cornerstones of smart investing. All right, so we get what they are and why they're so useful. But what about the how? How do you actually trade these things?
Well, this is where the first part of the name, exchange-traded, comes into play. It literally means they are traded on a stock exchange, just like a normal stock. You can buy and sell them anytime the market is open. And the price? It's always changing, moving up and down throughout the day based on the real-time value of all the stuff packed inside that basket.
Okay, so once you really get the whole basket idea, you start to realize something pretty cool. There isn't just one kind of basket. Oh no, there are thousands of different baskets out there, and each one is put together for a totally different reason. I mean, the variety is just wild. You could buy a huge basket that holds stocks from, say, the 500 biggest companies in the US. Or you could get really specific and buy a basket that only has technology companies. Want to invest in Europe? There's a basket for that. What about physical things like gold or oil? Yep, there's a basket for that too. Even for something like bonds, which are basically just loans, you can find a basket for it. But here's the thing to remember. No matter how fancy or specialized the basket gets, the main idea is always the same. One ETF equals many different things, all packed inside. One click, and you own a piece of it all. It's just a really efficient way to invest. So let's put it all together. Why are these things so incredibly popular? I mean, with everyone from total beginners to Wall Street pros. What's the secret sauce? Well, it really comes down to three huge advantages. First, they're simple. You buy one thing and you own pieces of many things. Done. Second, they're diversified. You get that risk-spreading benefit instantly. And third, they are generally low cost. A lot of ETFs just follow the market instead of paying a guy in a suit to pick stocks, and that saves you a ton of money in fees. So look, if you walk away with just one thing today, let it be this. An ETF is a basket. That's it. It's a basket full of different investments. It truly is that simple. And that's it, the exchange-traded fund. Not so scary anymore, right? It's more than just some financial term. It's a whole investment strategy packed into one simple purchase. So now that you know the what, the why, and the how,
The only question left is, what kind of basket are you going to build?